Welcome, everybody. If you can grab a seat, we're going to get going here. Thank you for coming to our 22nd Colliers Outlook Conference. A lot of new faces, a lot of familiar faces, so we appreciate you all being out here. We are excited about a great program for you today. We have a few speakers on our panel. We're going to be talking about the markets and what's going on a national, regional, and local level, and then also have a very interesting presentation on AI and what that is doing to the real estate market and other areas. First of all, to start off, I want to say some thanks. Every year we put this event, and it's always an interesting mix with people here. And as the years go on, we get more and more online. As I look, right now we have 1,104 people logged in. So welcome wherever you're logged in from. We appreciate your joining in. Our sponsors, I really want to thank Givens Pursley. They are full service leading law firm and good friends of ours and have been sponsors for a number of years. Land Pro Data, David Bailey, I see David here. Thank you for the sponsorship. Locally owned and nationally trusted. And it's a high-tech company providing the most precise land data, ownership data that you can find, and someone that we rely heavily on. Washington Trust Bank, our good friends. I see Conrad here. Conrad, thank you. We do all of our property management and all of our company banking with Washington Trust. They've been a great partner for a number of years. And then finally, I think Kyle and Kelly, thank you, with ServPro. Again, another locally owned group that is part of a national organization and one of the best in disaster restoration. And we rely on them quite heavily with all the properties we manage. So thank you to our presenting sponsors. If we could have a quick round for their efforts. And then we also have a number of co-sponsors that I'll go through to thank them. A10 Capital, Centimark Roofing, Bus Mechanical, Executive Cleaning, Rocky Mountain Electric, Babcock Design, and TradeStar Construction. Again, these are all groups that we work heavily with and put a lot of trust in. Not only, appreciation of them for sponsoring the event, but also the work that we do with them day to day and week to week throughout the year. So thank you to all of our sponsors. Without you, we couldn't put this on. And the last one I want to thank is our furniture sponsor, Freeform, Jeff Heath and the group at Freeform that provide us our furniture every year up here on the stage. That are one of the best interior furniture design groups for, if you're outfitting a new office, you can't beat working with them. And so thank you, Jeff and his team at Freeform. This is intended to be interactive, so we will have an opportunity for questions. So I want to make sure everybody's aware that throughout the presentation, if you have a question, you can text it and it will show up on the laptop, and we will have some times for Q&A. If you text it in, we will be sure to see it, and we'll include as many questions as we can at the end. The text number is 208-422-4978. Again, 208-422-4978. It's up on the screen now, and it'll appear throughout a bit. Since we last met, 2024 last year, now here we are wrapping up 2025, another year, and it's been an interesting year. I know last year at the event we were just prior to the election, so there was a lot of questions and uncertainty as to what was going to happen. Now we're a year later, and I think there's still a lot of questions and uncertainty. But I think one of the things that is really important at Colliers that we stress, and I think it's important for our business community in these times where there's a lot of, particularly with the media coverage and some of the tensions that are created, The group here, the folks we see here, we all work well together. Our team at Colliers works well together, work with civility, work with integrity and respect, and we continue to move forward. We've had a tremendous year. Despite the uncertainty of some of the economic factors impacting us, the interest rates still remain, higher than they were a few years back. There's still a lot of questions, with respect to the real estate market, but we have certainly seen at Colliers a tremendous uptick in 2025, and we'll talk a bit about that today. We're very excited about it, and looking forward to what 2026 has to bring. Test my monitor there. I'm sorry. With that, I'm going to introduce our first speaker. Our first speaker is Aaron Jodka. Aaron is the Director of Capital Markets Research for all of Colliers across the country. Aaron is going to be joining us virtually today. He is in Boston, and so in this age of virtual entertainment, he will be on the screen, and he will be available for questions afterwards. Aaron couldn't make it today. I'd like to say it was because he was home watching his Red Sox in the playoffs, but they were eliminated by my Yankees. And you'll note that I'm here because my Yankees were eliminated as well by the Blue Jays. So I can't give Aaron too hard a time, but of course I will. Aaron has, he's in charge of all of the capital markets, all the investments. If you think about capital markets, it's investment opportunities in real estate. He's in charge of that for the entire country for Colliers, so has a lot of insights, not only what's happening nationally, regionally, and locally here, across the various sectors, whether it be office or retail or industrial, land. So with that, I would like to take the opportunity to introduce Aaron Jodka.
Thanks, Jim. I appreciate it, and thank you, everyone, for attending. I look forward to sharing some thoughts on the broader U.S. real estate market. So I'm going to kick off with some trends on the U.S. capital market, so all asset classes coast to coast, and then dive into the major asset classes. So please feel free to text in any questions that you have, and Jim will review those and share them after the presentation. So with that, we will get going here. So first and foremost, deal volume has stabilized. The market finds itself in a bit of a transition where we're seeing broad-based signs of market stability across most asset classes from a fundamental standpoint, and we'll get to that a little bit more in depth with the individual asset classes, but that's a really good backdrop for improving investment sales activity. So volume was up last year. It's up year to date compared to where we were last year. We're seeing pricing improve across most asset classes. Institutional investors are back, which is a key point in the market. And I'll show you a slide in a few minutes that really gets into where capital is coming from. And it's really a private market driven cycle so far, but seeing those bigger players coming back to the market, again, positive backdrop for increasing liquidity and momentum in the marketplace. Loan maturities and distress are a major storyline, and we'll get to that as well. And that's something that we are watching very, very closely. Improving sentiment, by and large, Jim noted that there's still uncertainty in the market. That's 100% the case. That's still present. It's normal. It's in every single cycle, regardless of what year we're presenting. I could tell you some things that we're worried about and some challenges and uncertainty that are happening. But right now we're watching the 10-year Treasury very closely. It's right around 4% today, which is a really good number. We'd love to have it start with a 3. And I think psychologically markets would feel much better if it started with a 3. But that 4 handle is probably where we're going to be for some time. I mentioned that fundamentals are improving across most asset classes. And in some cases, we're seeing cap rate compression. We're seeing increasing values on assets, which is a really good sign. That backstop of capital that's been stuck on the sidelines is starting to unlock itself, partly regarding those institutional investors coming back. But groups that have raised money and have been sitting on it for some time, they need to act. And that is starting to happen. So that's setting the stage for a stronger 2026. And debt capital is readily available. So those that are out in the marketplace can find the debt that they need to transact. There was some challenges with that early coming out of COVID and coming out of the interest rate hike cycle. But right now we've found a really nice sweet spot where there's plenty of liquidity. So this chart here is going to show you all asset class volume over time. stacked on top of each other with the line showing aggregate volume. And as you can see, we had a nice run up prior to the global financial crisis, came way, way down, and it took a long, long time to get back to a sense of normalcy or back to previous cyclical highs. And it took a decade. So if you look all the way over from 2007, you have to go to 2018 before you get to a level commensurate with aggregate volume. And if you look at that mix of asset classes over time, 2007, it was very much office driven. Office was the story driving 30 some odd percent, 40% of volume. Well, by the time that we got to 2018, it was about a fifth. It was about 20%. We'd seen multifamily really kick into gear. And then post pandemic, tremendous volume came in from the multifamily side. Industrial as well. You can see that green has really expanded as well. And this was unprecedented levels of volume, right? We had a perfect recipe where lots of capital sloshing around in the system. Interest rates were essentially zero. We were in a risk-on environment. Venture capital was at all-time highs. Your Pokemon cards were at all-time highs. NFTs came out. It was wild. Everything was going up in value. That happened as well in the real estate world. So we saw over $800 billion of volume in 2021, eased in 22, and as interest rates rose, fell right off a cliff in 2023. But I will note, if you look back compared to the global financial crisis, when the market really, really shut down, 2023, yes, it was slow compared to those all-time highs. It wasn't so bad. 2024, it grew, and 2025 is again on track to increase again. We're in a pretty normal market. It might feel restrained. It might not feel like we're completely rocking and rolling, which we're not. Again, 2021 and 22 are great times that you'll tell your kids and grandkids about and reminisce. But it'll be difficult to get back to that level of volume in the near term. At some point we will, but in the near term, we would expect a slow and steady increase in activity. And we can see that across the board. All asset classes, with the exception of hospitality, have posted a year-over-year increase in volume year to date. This has been led by retail and office. Industrial has been pretty strong, and multifamily, that asset class that is leading all volume from all asset classes, has seen a more modest increase. But again, that $92 billion of volume far exceeds anything else. Pricing is up across all asset classes, so that's a really good story where we're seeing that momentum build for broad-based activity. So I mentioned that shift when we looked at that chart before, the stacked bars of volume. If you look here, the gray, that's office back in that 2006, 2007 period, 30-40% of volume, and it's now come back down into the teens. Well, multifamily is made up for that. And you can see that blue line on the top really rocking and rolling, really increasing. Industrial as well, seeing increased volumes, and retail of late has also started to come off the bottom. So starting to see a little bit more of a mix of asset classes and volume, but there has been a fundamental shift in where capital allocators are looking. They want more multifamily and they want industrial in their portfolios. Now, at some point, they probably get to a level that they feel comfortable with their allocations. And that gives a backdrop for hospitality, office, and retail to see some additional capital flows as groups look to rebalance their portfolios. CMBS delinquencies, getting into that world of distress, are up. And they're up across most asset classes. We can see that most predominantly in the office. That's the line again on the top, that gray line, at all-time highs. And that level has increased as data through mid-year. It has increased since this time frame. So office, of course, it gets all the headlines where you see deals from coast to coast selling at 50, 60, 70, 80, sometimes even higher percent discounts to previous sales. Now, to be fair, those offices are generally vacant or highly vacant. And as we all know, a cash flowing asset is worth more than a non-cash flowing asset. But that distress is there. So that is certainly a challenge. Retail's come in a little bit, but still up over time. Hospitality's been up and down. That tends to be a little bit more volatile. Multifamily also has increased, coming off of lows in the earlier part of 2024. And then industrial, generally speaking, is a rounding error. Industrial by far is the most stable asset class from a potential risk standpoint, from a distress. Now, will deals go bad? Yes. There will always be conditions where leverage was too high, tenant moved out unexpectedly, something goes wrong with the assets or that particular portfolio. But by and large, industrial has benefited quite well from its rent run up. Now, the loan maturity situation is across the board. So we will see this from multifamily, which is the bar on the bottom. That block is the largest of all asset classes. And as we get further out into this time frame, 27, 28, 29, it's about half of all maturities are multifamily. Office is a storyline today, as are hotels. A lot of that is front loaded. But I will note that a lot of this is getting kicked out year after year after year. Banks don't really want these buildings back. Special services are still working through the log jam. By and large, if it's if there's hope, there will be an extension. So over this total, nearly $1 trillion of loan maturities in 2025, several hundred million of this was kicked into 25 from 2024 or years prior. So if I were to show you this chart again at this time next year, 2026 will be the biggest year of maturities we've ever seen, because we're just kind of kicking the can down the line until we work this out. And this theory worked very well coming out of the global financial crisis, where extend and pretend, TARP and TALF and an alphabet soup of programs allowed us to work our way through distress. And we don't have that same condition today. The Fed is not looking to backstop commercial real estate. We're not seeing specific programs designed to gobble all this stuff up, but lowered interest rates, more liquidity, better conditions in terms of fundamentals will allow some of these deals that are getting kicked down the line to work out and to refinance and to find a future life with a probably restructured capital stack. Now, where is that distress potentially happening? This is all asset classes. This is data from MSCI. Manhattan's the first, right? These are your biggest markets: LA, Chicago, Dallas. Some of your biggest markets from a population standpoint, inventory standpoint, stand at the top. As you can see, your market's not on this top list. Nor is Boston, but the Yankees are, Jim, in Manhattan. So what we're watching is how this will ultimately play out. Now, these tend to also be the most liquid markets, where you have tremendous capital flows across asset classes. So while there's distress, while there's challenges, it also creates brand new buying opportunities, particularly those with new sources of capital. Now, if I'm an office investor and I have a major portfolio, I'm going through these challenges as well. But if I have new funds that I've raised, well, all of a sudden I'm getting in at a reset basis, and I'm able to acquire buildings in good locations and potentially undercut the market with rents. Now, I might keep my asking rents in line with the marketplace, but when you come knocking, yes, I can do a deal for a little bit less than that. I have more flexibility with tenant improvement allowances. Yes, I can actually fund the building improvements that I'm talking about, where in some markets those existing landlords are struggling. Earlier, I mentioned that there's pressure building for capital deployment, which is one of the best stories for continued activity in the investment sales market. Look at the dark blue on the bottom here. This is dry powder. These are amounts of capital that have yet to be distributed from 22 through 2024. About 70% of all funds raised are still on the sidelines. If you're a real estate investor, you're not in the market of, let me raise money and put it in a money market account. Right, you're ultimately trying to get this money deployed into real estate. So there's only so long you can kind of sit there. Now, fundraising has been a little sluggish, and we have seen some challenges when it comes to the recycling of capital. Oftentimes, an investor will invest with a fund. Fund performs well. Next fund is created. They're going to move that money back into and just kind of keep cycling that in with these partners. That part's become a little bit sluggish and a little slower. So we are seeing a delay in that cycling of capital relative to history. Let's dive into the multifamily market. As I mentioned, this is the market leader from a volume standpoint. Demand has been phenomenal. This has been rather surprising, to be honest, how well demand has held up in the face of record-setting supply. We have not seen a supply wave like this in about 50 years, coast to coast. A lot of that is focused on growth markets in the Southeast and the Southwest, and I'll show you a couple maps in a moment. But demand has been really, really strong. We've seen good job growth up until most recently. We've seen wage growth outpacing rent growth, meaning that affordability is still quite quite strong. That's not the case on the single family home market where prices are at all-time highs. So that is a nice sort of backdrop for demand on the multifamily side. It's keeping a lot of renters that would be homeowners in the rental pool for an extended period of time. And rent performance is varying widely. And this chart I like to show because the top markets are markets that aren't usually at the top. Detroit, Chicago, Kansas City, Richmond, San Jose. Those are the top markets for rent growth through the beginning of the year, where Denver, Phoenix, San Antonio, Austin, Atlanta are at the bottom. These are markets that have seen the biggest increases in inventory by and large and are resetting their marketplace. But slower demographic markets, again, those Midwest markets, some of the other spots that are along the Great Lakes have done quite well. So that slow and steady is paying off for investors. So there's allows for a different strategy of investment across markets. And we are seeing a lot of conversions. So this is where conversions come from. So those that are becoming multifamily residential, it comes from a wide variety of asset classes. Office is the largest, with a little over a third, but right behind it are hospitality. And at the end of the day, an extended stay property is easier to convert than an office building because it already has the plumbing. It already has potentially some kitchen setups. It has all the plumbing. It's got the bathroom, etc. Where an office building, yes, you have a bathroom, but it's not set up for individual units, and you need the right kind of floor plate, the right heights, etc. So the basis is a big deal. We are seeing an increasing sign of office to residential conversions across the country, but it really will differ market to market. So here's a chart. It's got, I know, a lot going on. These are the markets with the most deliveries as a percentage of inventory. So I'm not looking at the number of units. I'm right-sizing these and equalizing these markets by the amount of units coming online compared to its inventory. Again, your market's not on here as a sort of problem child, if you will. And what you can see, again, growth markets generally in the mountain states, Southwest and Southeast. Now, if I flip this chart over to those that still have the most supply, there's a lot of repeat markets on here. Salt Lake, Phoenix, Denver are on there, Austin, a couple of the Florida markets in the Carolinas are on there. Now, a couple other kick in, a northern New Jersey and a Boston. Those are places that are not typically seen as the fastest growing in the country. So we're going to start to see some pressure in different markets. And depending on how job growth goes and different economic policy, we may see some softening in some of these markets. But the Southeast is not all the way out of the woods when it comes to its supply wave, but it is getting there. We're seeing very few new properties coming online, or excuse me, coming into the pipeline after those starts are down substantially from where they've been. Let's talk a little bit about office. And I've got my colleagues' names on all these different slides for the ones that they've made. I don't want to take credit for their particular work. So Marianne, who runs our office, shared these slides with me. And this is showing a summary of what's happened in the office market over the last couple of years. So we can see that vacancies have steadily increased. We've seen that the amount of net absorption is improving. It's not dramatically great yet. In Q3, we're starting to see signs of additional gains. But when you're talking the US market, 6, 7, 8, 10 million square feet is it's a rounding error. It doesn't really move, but psychologically, it is showing that we're no longer in the red. We are seeing absorption. That is a really good sign. Supply is dropping off dramatically, very little under construction. Sublease space has peaked and is coming down, and rents have held up very, very well. So despite the record high vacancy rate, asking rents have held. And that's different than past cycles where rents have fallen. They have come down. That has not been the case by and large here. Now, this is the vacancy rate over time. So the line shows you vacancy, again, all-time highs where we are today. And the blue bars are representative of absorption. So anytime you're above zero, you have gains in occupancy. Anytime you're below, you have negative absorption and you have more tenants moving out than are moving in. Over on the left, you can see the 93 million square feet of space that was given back during the global financial crisis, which was a very tough time for the office market. Well, early period of COVID, we far exceeded that. Then a little bit of a stabilization, and then it kind of fell off again as we were still trying to figure out the work from home, return to office, etc. So we've had two cycles or two hits in the last 5 years that are worse than the global financial crisis back to back. So that is why the office market has deteriorated at the rate that it has. But again, we're seeing those signs of stabilization and signs of recovery in certain markets. From a vacancy standpoint, the Northeast is performing the best. Vacancies are down slightly. Everywhere else, vacancies are up. We can see a wide variety of vacancy rates across markets where Manhattan and Miami are amongst the lowest in the country, where San Francisco is over 30%. Atlanta in the mid-20s, Chicago mid-20s, as is LA. So we can see some wide variation there. Manhattan has been the market leader from an absorption standpoint. And we can see that very clearly in this chart with nearly 15 million square feet of space on a trailing 12-month basis through mid-year. Silicon Valley seeing good growth there. AI, of course, is a major storyline. Dallas, Kansas City on here, as well as in New York suburbs. From a construction standpoint, probably not a whole lot of surprises here. You've got your major growth markets of Dallas and Austin, LA, which is a major market with Manhattan and Boston. So your core coastal markets are seeing heavy construction, relatively speaking. Now, 2 million square feet, 1.6 million, 1.7 million, not a huge movement on inventory standpoint, but those are the overall leaders. And as I mentioned before, rents have held up tremendously well. So this is breaking down overall rents, Class A and Class B, and they're all up. Class B has seen the most pressure, relatively speaking, and we've seen certain markets where Class B rents have fallen, particularly those buildings that are the last to lease up in a cycle. Those are the markets that tend to also see, or buildings that tend to see absorption go negative quickest. So we've already seen that happen. We've seen some rent declines. Now, on the industrial front, my colleague Craig has shared the following, where our vacancy rate is at basically an inflection point. Third quarter data is coming in, and it's looking like vacancies are basically flat, where supply and demand are matching. Demand, the strongest we've seen in several quarters, really showing signs of that stabilization, again, which we need. Now, vacancies are up from all-time lows, which we reached in 2022 and at the beginning of 2023, and have since exceeded the long-term average. Generally, the long-term average is mid-sevens, mid-sixes, and we're above that aggregate level of late. Now, where have we seen the best performance? It's been the Midwest. The Midwest has been the most stable of asset classes, or excuse me, of regions for industrial. We can see that with Chicago, with vacancies down slightly over the past year. The West is up, the most of all asset class of regions, 132 basis points. South up, as is the Northeast. Northeast seeing some sizable movement there. Now, the reason is an imbalance between supply and demand. If we look on the West, the amount of absorption that we've seen in the past couple of years or last year rather, is only 15% of new supply. In the South, it's about a little over half, about a third in the Northeast. In the Midwest, it's almost 100%. So that is why the Midwest has held up very, very well. So supply and demand have been very, very well balanced. We've had more speculative construction and frankly, some more uncertainty with port activity in the Northeast and West, which has caused some variation there on the demand side. And the vacancy rates are highest in the markets that have grown the fastest. That's probably not a huge shock, but anywhere that you see red, that's indicative of an inventory growth on the left of this chart of 30% or more. So we've seen certain markets like Savannah and Austin where their inventory has gone up 60 to 80%. Tremendous growth. Not surprisingly, vacancies are up as well. When you grow that quickly, it's very, very hard to have demand match that level of activity. So you can see places like Charleston with a vacancy rate pushing over 20%, Austin just under 20%, Phoenix 13% with tremendous growth, and still some supply to come through. Now, a place like Dallas has led the country in terms of absolute supply, and while inventory is growing, it's held up pretty well, and absorption's done quite well. And in some of these markets, we're hearing signs of developers considering speculative construction again, because we're running out of certain blocks of space. So depending on where you are in the market, and of course that will vary city to city, but there are pockets, whether that's small bay infill, whether that's big bomber, distribution spaces in other markets, where there's a dearth of product. So there are opportunities to continue there. On the retail front, this is from my colleague Nicole. By and large, this has been a pretty stable market where we've seen absorption with slightly negative of late, deliveries very minimal, limited construction, vacancies are up just a bit, but not too much, and rents continue to escalate. So from a broad retail standpoint, we're in pretty good shape. So we can see the vacancies have ticked up a little bit, but they were basically flat for a couple years running. Very, very little movement with positive net absorption, slow and steady, continuing to drive stability within that marketplace. And that has a lot to do with sort of the balance between store openings and store closings. The blue is representative of openings. If we look at 18, 19, and 20, we saw far more store closings in the green than we saw store openings. And that's when we were talking about the retail apocalypse and the changes to e-commerce and what's a retailer to do. Well, retailers figured out how to navigate this, create an in-store experience as well as an online. Pick up, in store, order in store, ship to home, whatever it might be, finding ways to really integrate a number of different services. So that ended up causing a little bit of a change post-pandemic where openings outpaced closings for 3 years running. So really kind of turn the story there. 24, flip back, 25, so far so good. But we're in this point where we're trying to figure out the balance there. But I would argue that retailers, by and large, are stronger today than they've ever been before. Again, they've figured out this world of e-commerce as well as in-store experience, and the vast majority of product is still purchased in brick and mortar. So yes, e-commerce continues to grow, but product is more likely to be sold from a store. And as these Walmart.com, Best Buy, etc., continue to work on their in-store, you can buy something and pick it up in store. Is that a store purchase? Is it an online purchase? They're blurring those lines and making it just an easier experience for you as a shopper. And one of the best storylines that we have on the retail front is that the space per capita has been on the decline. We haven't been building very much in this country. And to be fair, we have more retail square feet per capita than any other developed nation in the world, and we could still get away with probably bulldozing quite a bit of retail to shore up the market to some extent. But population has been growing faster than the amount of space that we're building, and that's allowed so many markets to recalibrate. I would argue this is also setting the stage for some really intriguing development opportunities, particularly in those high growth markets where we've seen this rate of retail square feet per capita drop more dramatically. Now, some places in the Midwest, it's actually gone the other way. So we're seeing an erosion of their fundamentals because of very limited population growth, despite, again, limited construction. So this is an interesting balance that sets up some unique investor opportunities. So with that, I will end my slideshow and turn it over to Jim. If there are any questions in the audience, be happy to answer them. Thank you.
Thank you, Aaron. We do have a few questions that have come in, and so I want to direct these to Aaron. We will cover as many as we can here. The first one, Aaron, is, last year with the election, there was a lot of talk about changes to 1031 and taxation rules with 1031 exchanges. What, if anything, have you seen in the past 12 months with the new administration? Have there been changes? Do you see an impact on the 1031 market moving forward?
I think the 1031 market should be safe going forward. I don't see substantial changes coming to a detriment of owners and investors. The One Big Beautiful Bill Act, real estate was one of the key winners when it came to some of the different policies. I mean, at the end of the day, President Trump is a real estate guy, so I think that industry tends to be a focal point of his. We're seeing more opportunity zones being created across the country, and sort of the early stages of those all being designed. But that's going to create new investment opportunities, spots to really reinvigorate parts of the community. So overall, this administration is a positive for the real estate market.
Thank you. You had a slide there that showed the, as we like to call it, the dry powder, the capital that's sitting on the sidelines waiting to invest. And I think you had shown, and if I have it right, it was about 70% of capital raised in the last 5 years or so is still sitting on the sidelines. We're hearing that interest rates may continue to drop. The Fed has a dual mandate with employment, and there's a weakening labor market. What are
Yep.
you seeing? What do you think the inflection point is, or what will it take to get some of that capital back in the markets?
So part of it is time, unfortunately. So a lot of that 2022 capital is still on the sidelines. It's starting to make its way into the market. Um, we've seen a reset in values. We're seeing that cycle again start to move up with increasing sales volumes and increasing pricing. That tends to get people off the sidelines. It's like, well, it's going to be cheaper tomorrow. I'm not going to buy today. Well, it's going to be more expensive tomorrow. Well, now I might start to think about buying. So we're starting to see some of that momentum build, which is certainly a very good sign. Um, the dual mandate is certainly a factor, and the challenge that the markets generally had is the 10-year treasury has not been moving in line with the Fed funds rate. So as the Fed raised rates, of course, 10-year went up. As they cut and went down 100 basis points last year, the 10-year went up 100 basis points. 10-year started falling before the Fed meeting, and then after the Fed meeting, it went up about 25 basis points, which is what the Fed cut. So there's been a little bit of a mismatch there. So the 10-year is really what you need to be paying attention to. And the 10-year is not fully controlled by the Fed. The 10-year is a mix of international currencies, capital flows, our debt situation, growth expectations, et cetera, where the Fed funds rate, SOFR, those floating rate deals, that's where you're going to see the most relief in the near term as the Fed continues to decrease rates. So those on floating rate deals, that's where you're going to see that initial benefit.
All right, one more question here. We've got uh, multifamily there's a lot of talk about national crisis, a shortage of housing.
Mm.
Where do you see can multifamily continue at the pace it's been? And what are some of the indicators that you look at to see, if you're trying to predict maybe 6 months from now or 8 months from now, where the multifamily market will be? And I guess
Yeah.
that's national and particularly in Idaho.
Yeah. So broadly speaking, yes, we still have a housing crisis in this country. We do not have enough housing for most folks, particularly on the sort of middle market workforce housing, right? If you make, hundreds of thousands of dollars a year, like you're fine. You'll find a place to live. If you make the median household income, it is much more challenging, and it's very difficult to build that product today. So that's where we see this mismatch. Now, in theory, you build more high end units, that takes people out of the class B market, moves them to A, frees up space at C, moves to B, and then people can move into class C, etc. So yes, that does happen, but we would need a whole lot of units in order to really make that happen. Today, the cost of construction, the cost of labor, the availability of labor, the type of product that financially makes sense and where investors from LP to GP equity will invest tends not to be middle market workforce housing. So that's really where we face the biggest challenge. So many units were purchased in the last cycle because they were more affordable, because it was under market. Well, we're going to push rents 10, 30, 20, 30, 40%. That takes out more affordable, naturally occurring affordable housing out of the marketplace. So that's where we need to figure out. And frankly, I don't have a solution, Jim, on how we fix that. It's a mix of local policy, it's a mix of incentives, land grants, et cetera, in order to really create that kind of housing. Because at the end of the day, the bricks and sticks are the bricks and sticks. If you want to make it affordable, you want to make it a luxury. A 2x4 is a 2x4. It's a commodity asset. So there's a structural cost to build a unit, regardless of what ends up in it. Just the overall bones. And unfortunately, today that base price is still quite expensive.
One last question here for you, Aaron. On a couple of years ago, well, I would say to the audience, when we're looking at the slides that Aaron's got and a lot of the maps, a lot of that's focused on the primary markets or what we call the NFL markets, a lot of them.
Sure.
But a few of them, the NFL teams are primary markets. And then we have secondary markets, and Boise has long been what's known as a tertiary market. So a lot of investment capital, a lot of times they just don't look at unless it's a primary market, but certainly not at tertiary markets. A couple of years ago, Tom LaSalvia from Moody's was our keynote speaker and was talking uh, about how the Treasure Valley and the Boise market was actually slowly shifting towards that secondary
Mm,
status. That it was kind of on the precipice. And, the question specifically here is do you see that, do you see us crossing that line to a secondary market status? And what are the frictions? What are the things that help and may prevent that?
mm. So from a sort of tertiary to secondary or market, it tends to come to scale. So size, right? Pure population, pure inventory, the sort of market cap of your market, right? The value of all assets times square footage times price gets you a market cap figure. Some groups will just say if it's not above a certain threshold, I don't look at it. So a number of the markets that I showed on these charts, some of those are not considered primary markets. To certain investors, Austin is not a primary market. Raleigh is not a primary market. So it all kind of depends on where one's scale is. But I don't see any reason why Boise cannot continue to move up that sort of chain, if you will, of tertiary to secondary market. Affordability is a challenge in your market as it is in many places. You had a surge in migration during COVID, and that's settled down. So, what will long-term demographics look like? How has your city changed? What policies are in place to improve infrastructure and allow for growth and accommodate this continued expansion? And if you're able to navigate those challenges, then there's room for continued growth. When I first started my career, Nashville was like it was a place. Like you go there to listen to some music. Nashville's a place now, right? It is a massive growth market where there's tremendous investment. Still cranes dotting the skyline in Nashville. Not saying Boise's Nashville necessarily, but there can be dramatic changes over a time period if the market is setting the right policies in place for continued growth.
So really, population is going to be the driving factor, and
It
we've
really
we've
is.
obviously seen continued. We're not seeing the growth that we saw perhaps from 18 through 22. It has
Mhm.
leveled off a bit, but we're still growing. And again, I think that's why I point out the term NFL markets when we talk about primary markets. It's all based on population. It's how many people are there. You won't have an NFL team if they can't fill the stadium week after
Yep.
week, and
Yep.
there's certain numbers. So uh, the Treasure Valley and Idaho in general is continuing to grow. I think that at least from what I've seen from the investment perspective, some of the very largest institutional investors still really focus on that primary, is it a primary market or not? Outside of those, that's not maybe as important. They're looking at the growth, they're looking at the opportunities and a number of the other factors that go into the community and the great community we have here. I think it's going to continue to be of interest and provide more investment opportunities. Um, Aaron, with that, I want to thank you. I appreciate you taking the time out and joining us virtually. It's always great to get some good hard data and insights, not just what's happening in our market, because we're so close to it. Sometimes you can be blinded as to what's
Mm,
happening elsewhere. I know with our panel, we'll talk a little bit about some of the specifics here, but when you look at vacancy rates in office in San Fran, I think you had a 30%. That's
yes.
certainly down. I mean, it was up much higher than that. And
True.
Manhattan obviously is absorbing quite a bit now. So it is,
Yes.
and what happens in those markets affects what happens to us. A lot of that growth that we saw was from coastal markets moving here. And as those rebound, I still think we're going to continue to grow. We've got a long runway ahead. So, Aaron Jodka, I'd like to thank you and allow you to sign off. I know you have a Patriots football behind there. So while I gave you a hard time about your Red Sox, the Patriots are still in pretty good shape right now. So
Yeah, first place in the
enjoy
AFC
their
East for
season.
the first time in some time. So we'll take it while we got it.
There you go.
Thank you, Jim. I
Thank you.
appreciate the invite, and thank you everyone for attending. Thank you.
All right. welcome our next speaker. We have some, as I mentioned, we have some presenting sponsors here, and each of them has an advertisement or a piece throughout. For our first sponsor, though, you are fortunate we don't have a video. You're fortunate enough that you get me as the voiceover for Givens Pursley. So, Givens Pursley, a full-service law firm built on authenticity, ingenuity, and community. Their agile, innovative approach and strong local connections help to solve their clients' complex legal issues across several practice areas, including agriculture, business, finance, employment, government affairs, healthcare, land use, real estate, water, and environmental law. To learn more, head to givenspursley.com. Thank you to Givens Pursley. With that, I'm going to introduce our next speaker, Noah Riley. Noah he's the founder and leader of AI Genius Automations. We are working with Noah. We are working with him, actively working on our own AI platform and improvements and things that we can do. But one of the things that I want to point out as you're listening to Noah, first of all, I'm curious, how many people here, show of hands, how many people are a little bit afraid of AI? Yeah. How many people are actively using it, other than to write your emails, are actively using AI every day? Okay, so there's more and more people adopting. I mentioned the afraid of because Noah and I have talked a lot, and I mentioned AI in one of our all company meetings, and one of our company members, I hope he's here so I can embarrass him a little bit. He said, "Oh, good, so I get to stop thinking." That's a lot of I think that's some of the misconception about AI and some of the fear with AI. And one of the things I've really enjoyed as I'm getting to know Noah and listening to him and getting ideas is really looking at the humanizing effect of AI versus the dehumanizing versus what people may fear and may cause them to resist it. Looking more at what it can do for us. And I would ask you as he's talking and as you're thinking about AI, think about all of the different evolutions over our history, whether a technological or industrial revolution. I mean, these are times where people were afraid of losing their jobs or machines are going to take over. AI is the next advancement, is the next step. It's here. It's not going anywhere. We are trying to welcome it with open arms. Although myself being a bit of a technology dinosaur, I'm still working on turning the computer on and off. But Noah is introducing more and more things, that create efficiencies and show us how we can work, the old work smarter, not harder. And with that, I'd like to welcome Noah Riley to the stage. Go. Okay, thanks.
Check, check. Can you guys hear me? Excellent. Thank you, Jim. I appreciate the introduction. I'm going to plug this stuff in so we can have everything ready to go. Yes, my name is Noah. My company is called AI Genius Automations. For work, what I do is build AI-powered automations and software for companies. We usually go in, assess a lot of processes, and then figure out how we can build into a system. Because one of the biggest problems that we're seeing right now with AI is that it's over here, and everything you do is over here, and you can't figure out how to get it from over here to over here. And that's a very basic problem, implementing. How does it actually become an ROI producing asset as opposed to a cool thing that we talk about? Or even sometimes it takes more time. You arguing with a ChatGPT for an hour and you could have just wrote the thing yourself, right? We see these kinds of things. I have my HDMI plugged in. Are we? Yeah, let's do that. And then I have this for audio. Okay, so today we're just going to talk. Okay, it's all the way up. Hope weird noise doesn't come out of my computer. All right, so let's talk. You guys already know kind of who I am. I actually come from a graphic design background. I kind of got pushed into AI relatively forcibly when I learned that image generators were coming onto the scene. And as soon as I understood what an image generator does, I was like, oh, this is absolutely going to replace me 100%. Because I was a graphic designer. It's like, how am I going to compete with this thing? It does it like that. That was actually how I started to get into what can AI actually do. I wanted to understand my exposure as a graphic designer, and just as I started to get more and more into it, I was realizing this is amazing. And then I started to not want to do graphic design anymore because I just found so many incredible use cases for AI. 2.5 years later, here I am, and AI is what I do all day, every day. I boil in it constantly. This is the only thing. I don't have secondary income. This is it. This is it for me. I'm in it all the way in. So what I want to do right to start off is, anybody here not own a phone? That's what I thought. So unless you're a conscientious objector to using AI, I would like you to take out your phones, please. We're going to do an activity together, and it's going to be so fun. Okay. I want you guys to get the GPT app, and I can't slow down to let everybody check that everybody has it, but I do want to show you that there are often imitators. This is on Android. You see that little AI chat with that bogus looking logo that they tried to copy GPT. Don't get that one. Get this one. If you pull it up on iPhone, you'll see this other one, chatbot, AI assistant, Genie. Not that one, this one. So just what they look like on the different platforms. And what we're going to do, does anybody ever already have the GPT app on their phone? Okay, about half of us. That's good. So if you don't, please feel free. You can go to the App Store. You can get it on the Google Play Store for free. What I want you to do is go into your GPT interface, which is going to look like this page right here, just very, very simple. And I want you to take a picture. You can see this little plus icon down here. That is how you can add a picture into the chat. And it's going to pull up this screen. It's going to ask you what you want to do with that. And you're going to click on the camera. Okay. So I'm going to do this with you. Okay. I'm just going to take a picture of the room. Very simply. Can you describe what you're seeing in this picture in the style of Dave Chappelle? So you guys pick your own comedian, pick your favorite comedian, take a picture, do it, take a picture of the room, get your face in it if you want to be ripped apart by your favorite comedian. Okay. Let's slide over. See if it'll pick it up on here. Refresh. Oh, it's a new one right here. Okay, perfect. Awesome. Okay. Man, this this looks like the kind of crowd you get when you tell people the Wi-Fi password is on the PowerPoint slide. Wow, they got that one right away. You got this brother up front, that's me. He's all smiles, trying to keep it cool, like, yeah, I'm definitely not sweating through my shirt right now. And behind him, a whole ocean of people looking like they just found out this ain't a breakfast session with free coffee. Does anybody have? Did anybody do it? Get something interesting? Anybody want to share? Curious? All the way back there? Do we have a mic? Can I run back there? Is it faster? Easier? Let's do that, because we won't be able to hear you otherwise. I saw you laughing. Okay, you gotta speak in here.
So I did mine in Shane Gillis's voice. And the first line is, so I walk into this conference, right? Whole place smells like LinkedIn Premium. It gets better, but
Oh.
you get the idea.
Okay. So okay, there's a couple of things that I want to notice about this. Okay, and the lighting looks like it's from Avengers, but are about to assemble behind him. Blue on one side, yellow on the other. It feels like a conference. More like Thanos is about to pop up and to ask for your name tag. Okay, so interesting. So that it is seeing the room. It's noticing that it's actually getting the color of the lighting. It's getting the blue and the green and the yellow. I want to ask you something else. I'm gonna ask it if it can point out something I might not have noticed. I'm just gonna leave the typo about the picture. And there's a reason, and we'll get to that in a second. If you look closely at the row of chairs, there's a perfectly diagonal line of empty seats cutting through the middle. Oh, interesting. We'll go back to the picture. Oh, that is kind of interesting. Okay, what else did I get? Also, notice the symmetry. Despite being a candid crowd shot, the lighting, aisles, and even the blue glow from the spotlights create a cinematic composition. The speaker is slightly off-center. Framing pulls the viewer's focus into that area, while that sea of faces keeping him as the anchor. One last detail, almost everyone's attention is forward except for one or two folks who are looking exactly at the camera. Like they spotted the moment of history being captured. Okay, so something that's really interesting about this. One is that the detail, right? If you kept asking it for more stuff, it would give you more and more stuff. It's noticing like where the empty seats are. It's noticing the symmetry. It's noticing the colors of the lights. It noticed that I was off center in the picture. These little itty bitty details. There's a reason why that's important. Because what we're trying to do, honestly, in this age of AI is understand how can we actually get something from it. And if we don't understand what it's capable of, we won't know how to match up its capabilities with the processes that we currently have, right? So one thing that a lot of people don't know is that AI can do things like this, that it can look at a picture and describe in quite a lot of detail what is in this picture. Can you think of any thing that you do in real estate where you need to describe a picture to somebody, possibly? That would be like, it'd be really nice if you didn't have to type it all out one by one by one by one. That'd be really cool. These are things that AI can do. And it's not, these aren't things that take an enormous amount of creativity a lot of times. And I get this feedback a lot where we're kind of afraid that it's gonna step on some piece of our humanity. And we definitely have the ability to use the tool in whichever way that we want to. But what we don't want to do is spend our time doing a bunch of things that we don't want to do, don't require a great deal of skill. And so you take your high leverage skill set and you use it on a bunch of mundane, tedious tasks that take up the vast majority of your time so that you can't go and be good at the things that you're good at. This is the point that Jim was making, that this is about empowering people with a tool. It's not about replacing people with a bot. It's like a power suit. You get into it, you don't let it go just by itself and do a bunch of stuff over here. We can make it empower us to be better. Because I don't know about you, I don't want to spend my life doing a bunch of things I don't want to do. I want to do the things that I want to do. How selfish is that? So I'm going to slide back over here. You kind of touched on a couple of these questions, but how many are using AI intentionally in some way? I think we kind of got about half of us. How many people think that AI is a hype train? Couple, few, less, okay. Does anyone here refuse to use AI for any reason? Okay, got a couple. And how many people here think of Skynet when they think of AI? Right. How many of you think that AI will help humanity? You know, that's really encouraging. Most of the time when I do a presentation, it's not normal. People are usually very afraid, very skeptical. They look at it like it's insidious, because it's unknown. It's an unknown. We're so new into this journey. I think that there's so much value right now on curiosity. Even if you begin to use something like a tool like ChatGPT for more than just writing an email or spell checking something for you, you're already ahead of the game. Like I travel and I do this constantly. I talk to companies constantly. I'm talking about it and doing presentations. Trust me when I tell you that you're still early in the game. What you see in the media is not reflective of what the average person is doing when they use AI. If you're the person right now who goes and takes the extra steps to get good at using it for whatever reason you want to use it for, you are still ahead of the game right now, if you wanted to. So I think that's really cool because it gives us a sense of, like, there's a sense of hope. Like there's like a sense to get out of this rat race where we can get back to doing more things that we care about, because the whole point is to let this Let the robot do the robot stuff. Like I want to do human stuff. You know, the robot can't go outside for me. It can't like spend time with your kids for you. It can't even, and even on the other side of it, if you want to be more productive, it can make you more money. You want to, I mean, do you guys like money? I like money. Okay. So technology in the past, I want to go over a few of these because I thought they were hilarious. These are some actual quotes from actual experts from back in the day when some new big tech thing came along and people decided, you know what? I know exactly how this is going to turn out. Here's how. No flying machine will ever fly from New York to Paris. Orville Wright. That's interesting. The horse is here to stay, but the automobile is only a novelty. The telephone has too many shortcomings to be seriously considered as a means of communication. The Americans have need of a telephone, but we do not. We have plenty of messenger boys. The British Post Office. Oh man, there's no reason why anyone would want a computer in their home, much less their hand. 640K. Does that number make sense to you guys? You know what kilobyte is? You know how much memory that picture I just took up was? Probably like 5 megabytes, so I don't know, almost 10 times the amount of that right there. 640K ought to be enough memory for anybody. Bill Gates, a guy who kind of knew what he was talking about, right? This one is hilarious. Where a calculator today is equipped with 18,000 vacuum tubes and weighs 30 tons, computers in the future may only have 1,000 vacuum tubes and perhaps only weigh 1.5 tons. Back in 1949, when we knew all things. I predict the internet will soon go spectacularly supernova and in 1996 catastrophically collapse. The Ethernet inventor. There is no chance the iPhone is going to get any significant market share. Oof. Microsoft, guys, come on. Cell phones will absolutely not replace local wire systems. Television won't be able to hold on to any market after it captures the first 6 months. People will soon get tired of staring at a plywood box every night. I know, right? Who the heck? This one is hilarious. You guys remember silent films, of course. Who the hell wants to hear actors talk? Nuclear-powered vacuum cleaners will probably be a reality in 10 years. X-rays will prove to be a hoax. Louis Pasteur's theory of germs is ridiculous fiction. These are some of the, at the time, some of the smartest people in their industries making predictions about what they thought was going to happen. I think this is interesting for a few reasons. One is because it proves, I think in a lot of ways, no matter how many times we go back to this, we keep seeing that we are consistently wrong in our predictions. And there are a few people who kind of, by luck of the dice, are right? It's very difficult. In this particular environment where AI is changing so quickly and so rapidly, it is almost impossible to predict exactly where we're going to be in 10 years. But one thing that we can very reliably predict is that we're not going backwards. Like, there's no world where 10 years from now, we're like, well, AI is not a thing anymore. That's not true. Like, it just won't happen. And there's a reason for that. And I'm going to talk about that in a second. So I say that not because I'm an AI enthusiast. I say that because it's a reality that is almost impossible to escape. And so whether you're a conscientious objector or not, because AI is here to stay, you got to make some decision about how you're going to deal with it. Like, what do you want to do about it? You don't have to use it necessarily, but it will affect you. And it will affect how your employers think about you. It will affect how fast you can work. It will affect what platforms you choose to use and not use, because it'll start getting embedded into your day-to-day lives all the time. It's very difficult. It's going to be very difficult to get away from it, you know? So like, we have to have some kind of intelligent opinion about what's going on. So what's happening now, and this is a report that was according to Forbes, that in 2025, we saw a 31% use increase in global AI industry and this was going from 2024 to 2025, which I think is interesting. 66% of people are using AI regularly. 78% of organizations are using AI, and that's gone up from 55 last year. These ones are quite striking to me. 90% of hospitals are using AI to do diagnostics and monitoring. The two biggest adopters of AI technology are health and fintech. And there are very specific reasons for this, because it's the success metric. In health, it's the person died. Pretty serious. In fintech, is this number higher or lower? They don't have other incentives. So because the stakes are so high for them, they don't care about anything but the results. And it says something that these are the two biggest adopters. So for the people who are kind of standing back and thinking to themselves, I'm not sure if this is a real thing, I don't know how to use it, trust me when I tell you, if it's life or death, and you see 90% of medical institutions are using it to help them try to prevent people from dying, it works the way that they think it works because it's actually making a difference. Sometimes we get in this frame of mind where we want to like project what we believe or want to believe about it onto the thing. And as someone who's in it all the time, I hear people tell me this all the time. They'll be like, well, AI can't blah, 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 blah. And I'm like, okay. Like things that I know it can do because I do it on every single day, right? I'm not trying to be like, I'm trying to let you know that it is very much here to stay. It is extremely effective when it's put to use in the right way. And we just have the opportunity right now to actually move it in whatever direction we want to move it towards. Not only that, it's that students are using, 92% of students are using generative AI. So again, this idea is like, we're moving into a different kind of future. We're going to think of it more of a like an assistant, a partner. And I had this interesting interaction with somebody that I knew recently who told me, who was watching me work on my computer one time, and afterwards they were just like, wow, I never thought of using AI that way. You use it like an assistant. And I was like, how are you using it? I don't know, I just asked GPT a question. And I'm like, oh man, there are so many different use cases for it. It's actually really cool how many different kinds of things you can do with it. And the reason why this matters, thank you, Meta, is because AI is not going back in the box. This is not my theory. This is not my opinion. When OpenAI released ChatGPT, as a beta test, by the way, it wasn't even supposed to be a real product. It was a beta test, like, hey, let's see if this thing we built is cool. And then they literally broke the internet. After this progression started to happen, and they started to take up so much attention and market share, Meta, knowing that they were so far behind and could not catch up, released Llama, which is their version of ChatGPT, their version of an LLM. But what they did, instead of trying to compete openly with OpenAI, you guys may know this, they made it open source, which means that you can go onto the internet and download it onto your computer. That was their way to fight back. So they let the entire development community improve it and then just keep taking all the improvements because everybody who uses it sends their data right back to Meta. That was how they decided to fight back. So that means that even if there was the most crushing regulations that you had ever heard of dropped on AI tomorrow, there are millions upon millions upon millions upon millions of AI systems downloaded onto people's personal computers. Like we can't take it back. We can't put it back in the box. So thank you, Meta. We appreciate you for that. So what do we do? Okay, so there are three main ways that you're gonna get some kind of benefit from using AI, and it goes in tiers. And the further down you get, the more technical you have to be to get those benefits. The first thing that you are gonna get a benefit from is just awareness. There are tools out there currently, and tools that you're using or don't know about, that can solve the problem that you currently have, and the only reason you're not using them is because you don't know they exist. So this is the lowest barrier to entry to get a benefit, is awareness. Increasing your awareness of not only what AI can do, but what tools are out there that solve the problems that you currently have. The next one down is optimization and workflows, where you take the individual pieces of software that you have and you optimize them as much as you possibly can. You make them as effective as you can, learn as much as you possibly can about them, and then you have to learn how to make them talk to each other. If they can't talk to each other, you have to have a human in between every single gap in your software. Because when you have something over here in an email and it needs to go over into Word, you have to have a human take it from here and put it here, right? So it's like the integration, it's the talking of your software. And the holy grail of all business endeavors is meaningful automation. It means we get useful, deterministic, repeatable outcomes that actually do something good. This is what we're trying to accomplish. And one of the reasons why AI is such a huge player in that is because it has the ability to assess enormous amounts of information and pull out just the pieces that we need and then put them over here, which is something that we've had to do for a long, long time. Read this entire document, Joe. And when you find these 3 things out of this 100-page PDF, put it over here, and then send a message to Jane in Slack. We can have AI do things like that reliably now. That's really cool. So when you're talking about achieving some kind of competitive edge, it's really a 3-step process. First thing you gotta do is make time, because you have to make time, which means to push something else out. I don't know about you guys, but I don't have just extra time around, just hanging out, waiting to be taken up by something. And you have to make time to figure out, how do I actually do this? The second thing that you have to do is map out your processes. If you don't understand how you do what you do, it's gonna be very difficult to know how do I actually get AI to help me with these things? So you map out your processes, probably visually, it'd be the best way to do it. And then start learning to automate your tasks. And one thing that is gonna be really helpful in this whole journey is learning to think of AI not in terms of AI as a whole, but in terms of AI's individual capabilities. AI can do things like read and summarize text. We see that it can read or analyze an image and like produce things. It can produce audio, it can produce video, it can produce graphics. And so don't think of it in terms of can AI do X, Y, and Z, unless you understand what are all the things that AI can do. Once you start to split it up into these little individual pieces and you have your processes mapped out, you go, oh, in this part of my process, I read this giant block of text to find this one piece of data, but I know that's something that AI can do. So then you start to link it up and start to link it up and link it up and link it up. And then after you start linking up the capabilities to the pieces in your processes, then it's about finding ways to start automating those things. And then you can take things that takes literally hours every day or every week and make them take no time at all. That's an amazing thing that is possible right now, and it's accessible. If you put time into it, you're going to get that time back. You just gotta be willing to bang your head against the wall long enough, fighting with some piece of software that you're not familiar with until it becomes second nature. And then after that, you can just keep doing it, repeating it over and over and over, like building factories. Do I have time? Can I do my video or should I stop? I'm over time, yeah? Okay. Have you guys ever heard of AlphaGo? No one? AlphaGo was Google's AI project where they're trying to teach a artificial intelligence, a neural network, how to play the game of Go. You guys familiar with Deep Blue and Kasparov? So Deep Blue is the first chess computer to beat a chess grandmaster. That was back in 1980 or 1980 something. Back in the 1980s, I can't remember which year it was exactly. Ever since then, we still have not been able to make a computer that could beat a professional Go player. Because Go is so much more complex than chess that we didn't have enough compute to do it. It was impossible. It's been an endeavor of artificial intelligence forever to try to build something that could play the game of Go. This is one of the most incredible documentaries I've ever seen. It's so cool. The story is amazing. I'm not gonna go too deep into it, but this highlights the story of the team that built the first computer that could beat a professional Go player. And I'm gonna show you just a tiny little snippet at the end because I think it's really important to how I wanna kind of frame the rest of this. This is during the last game. There was a 5-game match between this artificial intelligence and the best Go player in the world.
지금
네, 돌통을 한번
돌통으로
만졌죠.
지금 만지고 있거든요.
Strange moves, but really after this. After this. Except for the.
포기할 것 같습니다. 여기까지입니다. 여기까지입니다. 여러분.
네.
여기까지입니다. 예.
I mean, I think it's just really is a once in a lifetime thing. I would say it's the most amazing thing, yeah, I've experienced. for us, it's the culmination of a 20-year dream.
It started as a pure research endeavor. We just wanted to understand, can neural networks play the game of Go? And from there, it went on to a level that I never expected. And I'm unbelievably proud of the team.
When I started doing artificial intelligence, it was 4 or 5 years ago. And I was really interested in that, but like many people would discourage me and they would say, okay, there's no future. So actually seeing that within 5 years, we are at this stage right now, it's amazing by itself.
Everybody say night.
There are so many possible application domains where creativity in a different dimension to what humans could do could be immensely valuable to us. And I'd just love to have more of those moments where we look back and say, yeah, that was just like Move 37. Something beautiful occurred there.
At least in a broad sense, Move 37 begat Move 78, begat a new attitude, at least, a new way of seeing the game. He improved through this machine. His humanness was expanded after playing this inanimate creation. And the hope is that that machine, and in particular the technologies behind it, can have the same effect with all of us.
I remember hearing a talk by Kasparov, who says that a good human plus a machine is the best combination.
This is a unique experience. Nobody can have this experience. Play with AlphaGo 5 games like this. So I hope Listener can find something in this 5 game, maybe some change in his game. I see today he fight. It's very good. Big master, real big master.
이번 경험을 통해서 조금 더 성숙했다고 생각하기 때문에 그걸 정리 잘해서 앞으로 또 발전할 수 있도록 하겠습니다. 정말 내 바둑 두는 이유를 찾았다라는 느낌, 사람들이 이렇게 해줬을 때 그런 느낌? 정말 더 나아가자면 정말 바둑 잘했구나. 그런 생각이 들 정도로 정말 저한테는 그 순간도 잊지 못할 것 같은 정말 그런 경험이었습니다.
This even is done, but for all the story, maybe it's just a beginning. We don't know. It's just when I play with AlphaGo, he showed me something. I feel beautiful. Just it. I see the world different before everything began. What is real thing inside the Go game? With this thing, I will change something with my game. Maybe he just can show humans something we never discovered. Maybe it's beautiful.
Technology, I think, in general it provides kind of an equal opportunity for more things, for just more. But the opportunity is not taken advantage of equally by everyone. And since I've started this kind of journey into AI, I think the biggest difference that I've realized between people who are starting to get a benefit from it and people who are not is the mentality. It's not how techie they are. People who are curious, they start to find so many different ways to help it improve their lives in so many different ways because they're just curious. They ask questions. They hit a wall and then they try something else. And you know, when I watch this documentary, it's always, I always find it so fascinating, the heavy emphasis on everyone's human experience. I mean, what are we doing with anything, any tool, any idea, any relationship that's not about our experience as human beings? Like everything we're doing, we're trying to feel something, we're trying to achieve something. This is just another tool that might help us do it. And it's just here. We can do something with it now, today. It's accessible. We did the exercise, it's in your hand. And so I'm not saying that you have to use or not use. I would never condemn someone who chose not to for whatever reasons they wanted to, whether it was on principle. But what I guess I want to leave you guys with is the excitement, the hope that if you feel sometimes like you're drowning, if you feel like sometimes it's so difficult to get ahead, like you don't have time to do the things that you want to do, like you're not able to hit the goals that you want to meet, that we have a new tool, a new opportunity to do things better, to do things faster, and to get back to, or maybe to, a life that we want more. If it's about your business, maybe providing them with a better client experience because you have more time for them. Like, there's a lot of possibility out there. And I hope you guys feel encouraged to try something new. Thank you.
I never thought this would happen.
Never thought this would happen. I never thought this would happen. We got you.
We got you.
We got you.
When the unexpected comes calling, call the one team prepared for what no one can predict.
We got you.
ServPro, like it never even happened.
All right. Thank you, Noah. A couple things I was just picking up on as Noah was speaking. We were watching the video. He asked for a raise of hands, I think, about people using AI, and I noticed there's a group over here, the Boise State real estate students, a large group. Every one of their hands went up. A lot of the other folks, it was 1 out of every 3 or 4, but guys, you actually have to write your own paper sooner or later. Okay, I understand that that's the new way in college now, but the other thing I noticed is I took a selfie. I asked AI to describe the room to me in an Eddie Murphy voice, so I can't actually read everything that was said verbatim. But there's this one, and I asked it for more details, and it says, "Then there's this lady just behind you. Yeah, she sees you taking that selfie. She's smiling like, oh, he gonna catch me on 4K. Dude, I'll say, she be digging on you." So I had to go back and look at the picture, and my wife was sitting just over my left shoulder. So AI is pretty accurate. The last thing, and I'd like to have our panelists come on up. We're going to start our group panel. The last thing I'd say is in that video, something that I thought was interesting when they were interviewing the Go world champion player. And I have to admit, I don't know what Go is, but one of his comments, he said, a human plus a machine. Now that can be powerful. And something I've been saying now for a while, I saw this quote someplace, and it said, stop worrying about losing your job to AI. Worry about losing it to someone who knows how to use AI. And I really think that's a lot of what Noah's talked about is growth and creating efficiencies and productivity with AI as an assistant or as a partner, not as a threat. So again, thank you, Noah. Really appreciate the presentation, and I know at Colliers we're very excited about the work that we're going to be doing with you going forward too. With that, I'm going to introduce our panel of Colliers experts here. John Starr, land broker with Colliers, Scott Raber, office broker, Kelly Schnebley in retail, and Jack Koska in industrial. We're just, our goal every year with the panel is to share some of our insights and local knowledge, with respect to what we're seeing. You've seen a lot, from the national and regional level. And also, I would just remind everybody, if you have questions for the panel, Noah is going to join us at the end. So if you have questions for Noah, please make sure you're texting those, and we will have him come up here to answer questions at the very end. But I'm going to jump in with, what seems to be a recurring theme, guys, for the last several years now. I think it was 3 years ago when, the market was a bit down, and there was a big announcement from Micron about their expansion here in Boise. And since then, that has just grown. The expansion's even larger. We can see the activity going on out there, and so there's always a lot of questions about what's happening. Jack, I want to start with you from the industrial side. On Aaron's presentation, we saw that industrial was certainly the most stable investment. From the particularly talking about some of the loans in default and in question, and how the industrial growth is going on. What have you seen? And not, yes, Micron is out there, but what have you seen in our market in the last 12 months, with respect to maybe non-Micron activity? What's happening in the overall industrial market?
Sure. So the Micron related users are the easy ones to talk about. There's a handful of suppliers that need to have a certain proximity to Micron, and those leases are getting signed, and we're seeing a significant amount of interest from them. Where I think it's more interesting is we're getting chosen as a distribution market. DOT, Department of Transportation drivers have a certain amount of hours they can drive in a certain day. And we're very well positioned in the Pacific Northwest, where our drivers can reach Portland, Seattle, Salt Lake City, Sacramento, San Francisco, Reno, and we're getting chosen as a market for distribution centers. A good example of that is Tractor Supply just built an 865,000 square foot warehouse in Nampa. So we're getting both interest from Micron related users and non-related users.
So a few years ago, we had kind of the land rush for industrial development out here, particularly the pandemic and just post-pandemic, where a lot of land was being gobbled up for industrial development. And I think we had almost, in 2022, 23, we had almost 10 million square feet of space being absorbed, or excuse me, being constructed. Where do we stand now as far as, the vacancy? I mean, I think on Aaron's slide, it showed, in the West around a 10% number. I think that's where we are. I think it was 10 to 18 or something, greater West. But what are you seeing as far as availability of space, types of spaces, what's moving?
Sure. So, I mean, on an average year, our market can absorb, an average good year, I will say, our market can absorb about 1.2 million square feet. Year to date, our reports are showing that we're actually at about negative 300,000 square feet. And I don't think that is very indicative of what developers are seeing in our market. I mean, just within the last couple weeks, DHL leased over 300,000 square feet, which would bring us back to even for absorption. And that's not even considering the multitude of leases that are being considered for upwards of 1 million square feet that could be signed here shortly. That'll bring us back to our annual good numbers, is what we're calling.
Well, if we're the last I had heard is of that 10 million, we've got 3+ million square feet left. And if we continue to absorb it, and yes, there's a couple of transactions happening right now that are extremely large, going to take up a lot of that space. What does that mean? I know some of the Micron users are still waiting. They're saying, hey, we have to wait for Micron to understand our long-term, commitment. Is there going to be space available for them if they're waiting a year or two?
There will, and that is certainly a common theme with these Micron-related users is they're waiting for Micron to be ready for them to occupy space. But we're seeing good signs. Developers are starting to look at phase 2 developments. We're seeing more industrial land transact, and builders are getting ready for a good 2026.
So John, with that, from the land perspective, we had so much land transacted in 20 and 21 in the industrial sector. Are you seeing that activity now? A rebirth, of interest?
Jack said, we're on phase 2. A lot of that stuff that we transacted back then, we did 400 or 500 acres of industrial land at that time. And so now we're starting to see phase 2 get executed on that land. They're really, if you look at East Caldwell, North Nampa, East Caldwell is the industrial ground's kind of gone. We don't really have a lot more available there. The new Caldwell URD is becoming a focus area out on Highway 2026 and Interstate 84. And then in Southeast Boise, we've always kind of stayed away from there for so long, and for a lot of different reasons, but we're really seeing Boyer pick up their activity there. And, we sold another piece out in that neck of the woods, and there is more focus on industrial land out in the Southeast.
I think it's really interesting, Jim, too, that it was a year ago when we didn't think we were going to be able to absorb all the new supply that hit the market. And here we are thinking, oh gosh, we might need to build more. So that is a really recent change. And I wouldn't say all the evidence is in to warrant these second phases, but we're certainly looking more positive than we were.
Are there, I know there's some larger transactions, some larger spaces being taken. Where's the sweet spot right now, square footage wise, as far as what's moving the fastest or what maybe is moving the slowest in industrial? Is there a type of space that's the most in demand?
Yeah, in that land rush you're talking about, I think most of the new warehouses that were built were catering to the larger users, 30,000 and above. In the last couple of years, we've seen quite a bit of flex space become a topic of conversation. And in that flex space, lease rates that used to be 95 cents are now $1.50. So it really points to the shortage of warehouse space that caters to these smaller users, and that hole's starting to get filled.
John, I'm going to get back to you in 1 second on another land question, but before that, Jack, before we leave industrial, iOS. So that's an area that you've been very active in and is really a trending area in industrial. Can you explain what iOS is and what's happening in the iOS market?
Yeah, so iOS is one of my favorite niches within industrial, and it really caters to the industrial users that don't need a big box warehouse. When you drive past Micron and you see 20 cranes in the sky, those aren't being stored in a big box warehouse. Those get stored on a laydown yard. And so what has become a popular trend is industrial owners are charging for yard space and allows them to monetize more square footage rather than just the building. So iOS is, if you were to put it in a box, it'd be low coverage industrial real estate, right around 15%, where it's a truck service facility, it's an equipment rental company where maybe they need some equipment under a roof, but not all of it.
So that's not only then you're saying an owner using its yard space for its own storage, but they're leasing out to third parties. They're monetizing it that way by subleasing or if they own the land, leasing it out.
Correct. And we've seen a significant amount of interest from national buyers coming into our market targeting iOS.
John, getting back to the land focus, we talk a lot about, and I know a lot of folks always have questions about the residential market. And while we don't sell houses, we're involved on the upfront side and building. What are you seeing from residential development right now, as far as the activity and where it's happening? Because obviously the commercial often follows.
Yeah. So infrastructure wise and so forth, we're really right now, we're at a time where we're on the edge on a lot of locations. Caldwell, West Caldwell just had a new sewer pipe extended about 2 miles. South Caldwell with all the activity along Highway 55, Karcher Road. North Eagle, the big Spring Valley project. They're the planned community out at the county line at Mayfield. And then we're working on another planned community just south of town. So kind of South Boise has always been, for whatever reason, off limits for residential development. And so we're seeing with the Micron thing and so forth, we're really seeing a lot of focus just right on that edge of town.
So Kelly, I'm curious with, if we're talking about new rooftops coming southeast, and then John also mentioned a lot in Caldwell, Nampa, West Nampa. What are you seeing from retailers? Is that are they following that similar trend? Are those areas, in vogue now for future retail opportunities?
Yeah, definitely. The retail always follows the rooftops, and as we see everything move west, retail is doing the same. So first it was 10 Mile, now it's the Highway 16 impacted area, the Highway 26 area in Caldwell that you mentioned, and then Karcher Road. So we've got, 6 and maybe more grocery stores coming to that Nampa and Caldwell area, which, we've just seen a couple of projects over the last several years combined. So that's a huge impact to the retail scene.
So John, I think you grew up in the Caldwell area. Did you ever think you're going to see 6 or 8 major grocers in town?
The two Albertsons in Caldwell have always handled all the business. It's, they're less than a mile from one another.
So piggybacking on the land and the development opportunities, what are you, we often talk about municipal resistance, but what are the other impediments right now? What would you say are the primary things that are, holding back development opportunities?
So the one is access to power. We have plenty of power. What we lack right now is that last mile access. We're working on a large planned community, and Idaho Power says, oh yeah, we have juice for you, but only for so long, and then you need to spend $20 million for a substation. That particular substation is going to be used by a lot of different people, not just our planned community. And so, then you have to cage everybody, get them together and focus on getting that done. And it's not just a matter of, we've already sold them the real estate. That was the easy part. They have to go order the equipment, and that takes them 2 or 3 years to deliver. And then the tremendous cost. The other thing is you can say transportation, which is just a big Pandora's box. But if you really narrow it down, it's east-west transportation. And it's the extension of Lake Hazel. It's the driving a loop road around the south side of the city. It's east-west transportation.
So back to the power for a second, if I'm hearing you right. I know Adam Richens at Idaho Power is probably one of the biggest ambassadors for the state of Idaho right now, because anybody around the country looking to relocate here on anything of size, the first question is power. So Idaho has long been known as having an abundance of low-cost power. You're saying it's not necessarily the availability of power, it's the distribution, it's getting it to these new areas, and I guess through building of substations.
Yeah, so for instance, in southeast Boise, the Gowan Road substation is a good substation. Services everything but Micron in southeast Boise, and it's full. To do more development down there, we have to build another substation. And that's, we run into that whenever we're out on the edges, we run into that sort of thing a lot.
And then the other thing you mentioned there, transportation, I guess I would say transportation has been talked about for so many years. And, whether it's leadership conferences, this conference, other meetings, I'm actively involved with the Boise Chamber board, the incoming chair, and I guess I think Bobby Joe, and I know Paul is here, so I'd be in trouble if I didn't mention, but there's a new effort through the Metro Chamber and really being spearheaded by Tommy Alquist and Garrett Lofto from Simplot called Keep Idaho Moving. And I would just encourage everybody it's really taking shape right now, over the next few months, keep your eyes and ears open, get involved. This is going to be, in my mind, the first real effort of taking all this talk for a number of years, whether it's about a light rail line or a loop highway connector or whatever it might be.
Or technology.
Moving that into action. Excuse me?
Or some type of technology.
Right, right. But this is really trying to mobilize that. So Keep Idaho Moving is going to be a very important effort. And I think, you know, we all know we can talk about it, but if the infrastructure is not there, if we don't start acting now, you know, building a loop highway road, you know, you can look at how long it takes with Highway 16, right? It takes years. So it's got, what we start now is still several years away, but I think that's an exciting opportunity for the valley, you know, to address a number of these transportation needs, and hopefully we'll actually start getting after it. So Scott, I want to, you know, it's beating the dead horse or whatever you want to call it. The pandemic, work from home, the whole shift in now we're seeing it nationally. It's a return to office. What are you seeing in the office market in our area? You know, we saw some of the vacancy rates up there on the screen from, you know, larger national cities across the nation. What are we seeing here?
Yeah, we're seeing a fairly muted market when it comes to office. We're just not going to be in the headlines in the next year or two, either on a high or low status. The vacancies are very steady and healthy in Boise, around 6 to 7%. You know, nationally, it's twice that probably. But we have a limited amount of supply under construction, and it just seems that companies are moving here, but there's also companies that are right sizing and will give back some space, or, you know, the occasional move outs. And so very steady market. We expect it to be that way for a couple of years.
Are you seeing much? I know, you know, a few years ago with the pandemic, we had some companies just go fully remote and some vacant space. And obviously then that's a lot of subleasing activity that came on. What's the subleasing market look like now? How's that space been absorbed?
Yeah, great opportunities for companies that are looking to upgrade their office. There are some very nice sublease spaces available at a very affordable, you know, value-driven price. So it's been a factor in our market, but it really hasn't been a negative in any way. And so almost all the space that has been put out has been absorbed.
Well, again, we've been fortunate. We tipped up into the double digits for a little bit there, you know, maybe 11, 12%, but then we're back down. And I think, you know, from what Aaron showed there, the office market, steady growth, you know, it's not going to be rampant, but continued steady growth. Are you seeing a difference between downtown and the suburban areas as far as development or office opportunities, or niches in the market, areas of the market where you're seeing, you know, more growth this year?
A bright spot in our office sector is the medical office leasing. Obviously, with the departure of Salter Medical, they left behind some beautiful space. There's lots of users that are moving into that. And Scott Feiner runs our medical office department and is having a really strong year and expects that to continue. So that's a niche. Obviously, we see some medical office buildings being built with St. Luke's downtown. Modest new spec office development. So again, fairly healthy.
How about the relationship between landlords and tenants, users at this point, you know, with the return to office? I know even pre-pandemic, there was kind of an era there of you know, trying to trick out offices, so to speak. And what are you seeing now as far as what landlords are doing, what tenants are demanding?
Still a flight to quality. The more expensive, newer buildings have a lower vacancy rate. Downtown has some buildings that are being renovated to attract new users. There's quite a bit of vacancy in the downtown market. Colliers is a prime example, though, of listening to our employees. We're going to be moving our office, and we polled our employees over the last couple of years to understand what they want, what they need to be effective and really efficient back in the office, and also to attract people back. So it takes incentivizing and not just a policy that it's back to work. There's has to be a conscientious effort and some motivation to bring people back and change their habits over the last couple of years.
Well, since I started doing free lunches, I mean, I get to see you guys at least once a month. When we
Right.
are
Amazing what a free lunch will
provide
bring.
lunch.
Yeah.
A super creative approach that we've taken, but shifting here a little bit, John, you know, you had mentioned, and Kelly, I'm curious, we brought up Highway 16. And so anybody that lives, you know, Center Valley or the western part of the valley knows what's been going on out there. Where are we? When's it opening? What's the timeline? And what are you seeing from, you know, how is that impacting planned retail development right now?
Yeah, I mean, so it does feel a long time in the making, obviously, but Highway 16 is slated to open in 2027. And I think it's probably a little bit hard to comprehend how that will change everyone's traffic patterns, but it's definitely driving a lot of retail interest along with home builder interest in that area west of Highway 16 primarily. So mostly North Nampa, a little bit of Northwest Meridian. And so we're really seeing you know, a lot of interest. It's still a little early, very green to actually sign a lease or get moving on anything. But the retailers we're working with are definitely tracking that area, planning which intersections they want to be at, how that spacing works with the other areas they're in the market.
John, same thing with home builders? I mean, is that?
Yeah, so, you know, we've all been watching Micron and Highway 16, and what we didn't notice in the meantime, Jim, was that most of the land north of Nampa, east of Caldwell, south of the river, was bought by a developer. There's very few large tracts in that area that are still in the hands of any farmers. Probably not more than a handful. We got a 1,400 unit apartment complex that was approved there last spring. There's a large planned community in North Nampa that's, I don't recall if they got their final approvals, but they were working towards that last summer. There's just so much that's gone on there while everything's kind of getting set up, and now it's time to execute.
Jack, on the industrial side, what's happening along Highway 16? I mean, I know there's a decent amount of industrial land along that corridor.
Yeah, there's a decent amount of land, and most of it's in the hand of developers. A lot of that's starting to get built out right now. And the way that I look at it is it's really the 50-yard line of the valley. And so these smaller users, HVAC contractors, people that need to service homes throughout the valley, maybe in the past they had to have a location in Southeast Boise and then another one in Nampa to be able to service both ends and get there in a timely fashion. Where now they can sign one lease right on the 50-yard line and reach their clients all over the valley. So it's been a good pocket for them. And something that I think will continue.
And I would assume, Scott, if that's the 50-yard line, then, you know, areas like 10 Mile Road and around there, you probably anticipate down the road some office development opportunities because, again, commute times, you know, people would prefer to be closer to where they live.
Yeah, absolutely. It's you asked earlier about office or downtown versus suburban office, and that kind of touches on that. It's very hard to convince a tenant to move from a suburban location downtown or vice versa. A tenant, that's their you know, the decision makers feel like that's their identity, one or the other. A lot of times their business will dictate where they want to be, if they want to pay for parking or not pay for parking. But yeah, the down suburban market has done very well in the past probably 5 years.
Kelly and Jack, are you seeing crossover, you know, especially we talk about some of the industrial spaces, retail industrial crossover as far as the types of users, you know, looking at industrial, for example?
Certainly. I mean, a good example of a recreational user would be a batting cage, where traditionally they've looked at industrial space because our lease rates were lower. We went through a whole process trying to find a space in an industrial warehouse, and we ended up actually landing at a retail location because lease rates were lower, the parking's there, and the column spacing worked for them.
Yeah, and we have seen more of that move as the prices have gone up and the vacancies gone down in industrial. And then at the same time, with some of those big boxes opening up in the retail space, that provides some opportunity for these recreation users, experiential users. And really, it's probably a better fit for everybody. Better parking, better access, better visibility for the tenant.
Kelly, I'm curious on Aaron's one of his slides. You know, it showed the retail openings and closures, you know, year to year for the past 7 or 8 years. And what was really interesting is obviously 2020, the closures way outnumbered openings, and that's just due to they had to shut down. But 2018 and 2019 were heavily more closures than openings, and now we're seeing the opposite. We're trending more, you know, towards more openings and closures. But we still read about a lot of mid-box and big box users closing down. What's that doing? What impact is that having on the retail market?
Yeah, it was. And, like his chart showed, it had kind of quieted down for a little bit. In a few years, there were so many more openings than closings. And this year we've had some notable Joann's, Rite Aid, Big Lots, some kind of, big names with multiple locations across the valley. But that's really, I think opened up this opportunity for new types of users, the recreational. There's some new fitness groups that are looking at this market that I think will really bring something new and unique to Boise that we just haven't seen before.
Are you still seeing the experiential retail? I mean, is that, I know it started, what was it, axe throwing? That was one of the first things, right? Taking
Yeah.
up spaces and escape rooms. And is that still a real driving factor in retail?
It is. And I think there's still, there's always going to be those fad type of uses that will come and go. And we can just enjoy them while they're around or make fun of them, whatever the case may be. But I think there's definitely that desire that they're seeing from the consumer to go out and do something meaningful with their friends, with their family, and have a place to go and do that, where there's good food, there's good drinks, but there's also something fun to do to kind of occupy your time while you're there.
All right. Well, we are getting towards the end of our panel here, and as I always like to say, we're getting close to we're the last thing blocking you from food and drinks shortly. But I want to just close with just open it up to anybody here on we heard Noah talking about AI and some of the opportunities. I think for us. Some of the exciting stuff is the summary and analysis of data, how rapidly it can be done. If we take over a building with 50 leases, we can abstract them in minutes as opposed to days or weeks. Just curious, what are you guys doing with AI now, or what are you hoping to do?
Well, I haven't figured out how I can get AI to go pull the manhole cover and see how deep the pipe is. So. But I could probably figure out how to get AI to tell me where the manhole cover is.
I use AI to review documents for me, summarize them. I'm looking at ways to actually browse my emails and then give me summaries of emails. Sure, a few of you have 5 different emails and can't keep up. So
Scott, I'll just warn you that you don't read your emails now. And when AI summarizes them for you, you have to read the summaries. It won't keep going. At some point you have to read, even if it's the one word that it narrows down.
Noah, will you help me, please?
Kelly?
I used it some for brainstorming, but I think, listening to Noah talk about it really kind of inspired me to make some time and dig into it.
I try using it for just about everything. This is the truth. I mean, it's a really useful tool. I'll upload 2 different red lines, and one from a client, one from the other side, and say, where's the disconnect? Where's the negotiation strategy? How do we bridge the gap here? And it's something that I could do myself, but it moves it very quickly. Lease amortization schedules. This is all stuff that I could sit down on a spreadsheet and figure out, but I'll have AI open on a call, and it makes me sound a lot smarter than I am.
Anybody notice a generational trend in these responses? Jack regularly walks around the office and nods and says, "Okay, boomer," when he sees John or I or the same age.
Yeah.
But at least he's acknowledging that it makes him look smarter than he actually is. So this whole thing is being recorded, by the way, so that will come back to you. But with that, I want to thank our panel. We have 33 seconds on our timer, so we're finishing just under time here. I appreciate the insights and the input. I am going to, at this point, I need to grab my iPad with some of the questions and invite Noah back up if there are any questions for the panel or for Noah, and we will go through those.
Trusted name and providing insights to those shaping our communities. But Idaho's land development scene is evolving. We're developing 3 new products. First up, LandPro Plan. Building on our core platform, we're introducing a project management suite made for surveying, engineering, and building pros. For those who watch for our quarterly newsletters, we have LandPro Insight. These next-gen reports transform our data into customized analytics, so you can have ongoing competitive intel whenever you need it. Finally, LandPro Alert evolves our commitment to deliver timely information, giving you important parcel, instrument, and meeting updates straight to your inbox. Visit us today to talk about joining our exclusive customer advisory board. And be sure to take the brief expert survey below. LandPro Data. The land data you need, anywhere, anytime.
All right, I apologize. The iPad got moved with the podium, I think, but we've got a laptop here. So first question, and Noah, I think this one's really directed at you. And I anticipated this probably coming up, but with AI and we hear about data breaches and different things, what's the risk of putting information on a chat GPT or any of the different AI platforms? How secure is that for a company to be putting its information or, consolidating it in one area with a AI platform?
Yeah. Am I on? Can you guys hear me? Yeah. So a lot of the data security, if you're talking about protocols, is specific from company to company because each company is following their own set of protocols. The way that, like any Microsoft or Google, they have security protocols that they follow. OpenAI in particular, if we wanted to use that example, is actually one of the most secure. Like they're right up there with Anthropic. After they partnered heavily with Microsoft, they started going out and getting all those certifications. So they are GDPR compliant. They have SOC 2 compliance. They have HIPAA compliance. They have some of the tightest security of any AI platform out there. People don't know that. You can look it up and see their certificates. I'm like echoing. But yeah, they're very secure. In terms of what you put into the chat, I've heard people give this example, like I put something in the chat and then I had ChatGPT ask it for that information and I gave it to him. That's not true. That's not how it works. That's not how the models are trained. It's not a big pool that goes in and everybody gets to dip out of it. If you're using a business or enterprise plan or you're using the API, the models do not train on the data by default. You have to opt in. If you're using the free plan on ChatGPT, it will train on the data by default, but you can opt out. And you can do temporary chats, almost like incognito mode, that will delete all of your information as soon as it goes in and goes out. But see, the thing is, people think of it like because they're typing words in, that words go in and words come out, but they don't. GPT never sees a word. It's tokenized. It sees numbers. So kind of thinking that people are going to be able to pull that information out of a chat is kind of like thinking that if you threw a spaghetti sauce recipe into the ocean, that someone can ladle it out and then get the recipe. It's very, very, it would be very, very difficult, almost impossible. So it's more secure than people think.
Well, it's a piggyback question on that, because part of what I'm hearing and part of what I understand with AI is a lot of it is how you ask the questions and how you, the parameters you put around it. So one of the questions here with that is, what's the best way to learn AI? Is it to have AI teach you how to use AI?
How meta. I can't think of a better way than to just experiment. There are a lot of use cases. I would say that if you're brand new, look at some things that other people have done. I mean, as you know, even just on YouTube or on a post that someone said, I did this with AI, and try to replicate the process. I think where I see people stop is when they encounter their first either bad response, or they get into a process and they don't know how to get to the next step, and then they say, oh, this is garbage, or oh, AI sucks, you know, and then they just stop, not realizing that, oh, if I just would have gone this way instead of this way, then I was going to get to the answer that I wanted. There are a lot of people out there who are trying to give out different kinds of AI certificates for these kind of things. Most of it's around prompt engineering, but I don't think that prompt engineering is going to be a durable long-term skill, because most AI platforms are actually modifying the prompts before they get sent to the servers, because we're so bad at it. So there are nuances to how you would prompt to get certain kinds of answers, and which platforms answer in different ways. But it's really difficult to know that until you try it. There is an incredible amount of value in just putting your hands on it, you know, and just trying, just messing around, play, you know, just see what happens. You'll find a lot. Yeah.
Or you can work with someone like Noah, but he's very busy.
I do classes.
Future, working with us, so.
Yeah.
This next question, I am curious, and I'm really glad that Givens Pursley is here, and my friend Judd Montgomery, because maybe he can answer this better. But who has the IP rights to what you put in on AI? I don't know that. I'm not sure if we have the answer to that. But if you're creating a story, is that yours or is that AI's?
We do have the answers, actually.
Okay.
As it stands right now, copyright law does not have any protection of any kind for any AI outputs, no matter what they are. None. So no one owns them, because they're machine made. There are laws that there's a lot of litigation that's currently happening around this process, especially when it comes to image generators, because the artists are up in arms about whether or not that was infringement to train on those images. But as far as the law is concerned with copyright, no one owns it. Literally no one. You can't own AI outputs. But that's a very specific nuance to how copyright works. You can own processes. And what often happens is not the prompt it's not the output that you take and you want it to be IP. You take a series of outputs and then you do something with it. And technically, that series of outputs, the way that you use them is a process that can be IP. So there's a lot of kind of nuance to like how the patent structure works around it and why copyrights work the way they do. But in general, if you were like, you know what, I'm gonna have AI write me a book, and then you just like set it and forget it and come back, you do not own that book.
If you leave it there, you do not own that book. But do you have the right to go publish that book if you take it when it's generated?
Oh, absolutely.
And then chat can't come back to you and say,
no,
we created that?
The current verbiage it has to have a significant human contribution. So significant, especially under this new world of generative AI, is being questioned quite a bit, because there are a lot of people who are using it for a lot of different things. But we haven't come to a very good conclusion yet, because it's so new. The courts are quite far behind.
You got off the hook there, Judd. I was really wanting to get a real estate attorney to have to answer the question, put you on the spot. But well, the last question I've got, and again, AI related. If you got any questions for our panel, if there's any real estate questions for them. But and you know, this is a little bit of an open question. I think it's for everybody to think about. But it says, how much do you think there's a risk of individual critical thinking diminishing through the use of AI, particularly in the educational context, you know, for students? And I know, I think Drew Lorona was here from the College of Business, and I know we've discussed that. Drew, I mean, I'm welcome to thoughts you have on that and how Boise State is addressing that, you know, to ensure we're still teaching and experiencing critical thinking. or anybody else?
I was listening to a podcast recently about this subject with Sam Altman, and creator of OpenAI. And he said that when Google came out, school librarians were freaking out that kids were going to stop learning because they were going to stop going to the library to find this information. It's not that they're changing it's not that they're stopping learning, they're just changing how they gather the information. So it's not that AI is going to think for us. I mean, we still have to prompt it. We still have to read what it's giving back to us and progress through that. It's just going to be a lot quicker.
I would agree. I use it, I mean, it's probably, I would say my number one use case is learning. It helps me learn faster. It helps me spend less time sifting through irrelevant information. It helps me locate information faster. And when I don't understand things, it helps explain it to me better than just some random article or in any way that I want to. I love this question because really this isn't a question about AI. This is a question about human nature. We have lowered the threshold to cheat as far as education is concerned. We lowered the threshold. The bar's lower. It's easier to get over. The people didn't change. Like kids can decide now much faster that they want to, like, I think I'll just have AI do this, which I love because it puts the impetus back on the education system to be like, how do we actually add value and educate? Because now we're moving into a very interesting world, because we've already had this problem before where there's this kind of fundamental disconnect between academia and industry, and we try so hard to marry them, and some people do it well and some people don't. But the industry expects one thing, and academics they want people to learn, but then industry is like, well, it's about the bottom line. And the intersection between those two things is really important, right? And we should be preparing people to get these jobs. And as we go into a situation where AI is taking up more and more of what we thought of as thinking roles, what are we teaching kids then? Because we don't have to teach young kids to want to learn. Where do we lose them? Like, where's the spot where we decide, you know what? I don't care that this thing is the thing that you're inspired by. Sit down and memorize this stuff. You know what I mean? I think that we're going to get more into a state of almost play, where learning is going to be more customized. It's going to be more personal. It's going to be more explorative. It's going to be more less of memorize all of these things, and more become the thing that you most want to become, which is what we tell kids when they're young, and then progressively tell them, okay, it's time to stop with that fantasy stuff. Here's real life. Like, I think we're going to get hopefully closer to that. And then I don't think everyone's going to do it equally, but at least we have the opportunity to do it.
Well, I think that's on one of your earlier comments about opening up more time for life and whatnot. In the educational context, it's opening up more opportunities to explore what you want to learn and the areas that will allow you to grow and expand, as opposed to just the rote learning where we march people through on the same path.
Right.
Perhaps it creates efficiencies on learning some of those fundamentals, and then more opportunity to really expand your mind. Yet to be seen.
Which is beautiful, though.
Absolutely.
I've talked to a few professors at BSU who've told me kind of across the board that at least 60% or more of their time is spent not teaching.
Yeah.
And that is crazy to think that you have PhD level professors who are spending their time doing administrative tasks, and they don't have time to even personalize the lessons towards their students. What if they spent 100% of their time focused on their students? What would the education look like then? Like, we can actually get to that point. I think that's feasible.
Absolutely. Well, with that, I want to say thank you to the panel and to Noah. That is the end of our Q&A. I think do we have one more? No, we will wrap it up here. I just want to take an opportunity again to say thank you to everybody for coming out. Again, this is our 22nd annual Outlook Conference. We look forward to next year, October 19th, for our 23rd Outlook Conference. Hopefully we will see you all again. I also would mention quickly, again, I've got to make sure I keep in line for Bobby Joe Muehlman and Paul Fleming and the Chamber gang. Tomorrow is National Chamber of Commerce Day, and there's a number of events going on throughout the Valley where the different chambers are coordinating together, have different activities and events. So If you're not familiar, log on to your chamber's website and see what's going on, but that's happening tomorrow. Hopefully folks can take part in that. Again, a final thank you to all of our sponsors, our presenting sponsors, Givens Pursley, Washington Trust Bank, Land Pro Data, and ServPro. Our co-sponsors, A10 Capital, Bus Mechanical, Centimark, TradeStar Construction, Executive Cleaning, Rocky Mountain Electric, Babcock Design, and finally to our furniture sponsor, Freeform, for every year helping us set up this stage and put this event on. With that, I would welcome you to enjoy some food and beverage in the adjoining space here, and a little more networking opportunity. And of course, any of the panelists, Noah, are available for questions while we mingle. Thank you.
Since I met her from the start, I'm so proud I am the only one who is special in her heart. The girl is mine. The doggone girl is mine.